I'm James Knoedler, and I'm a portfolio manager with Evenlode Investment. I look for investments which are long duration and have, well, actually infinite duration, ideally, and which can generate attractive returns ahead of inflation for a very, very long period, where you don't have to worry about reinvestment risk, roll risk, anything like that, which can grow as an index on the broader world economy and ideally go a bit ahead of that. So that confines me, well, pushes me towards listed equities, which I think have got the longest durability out there among financial instruments. And then within equities, listed equities, it makes me concentrate on ones which have some sort of hard to replicate competitive advantage. It can be household names like a Colgate or a Diageo, or it'd be companies with more esoteric reasons for existence like an Experian or a Verisk or an Informa. But those sorts of companies have found through my career compelling as investments with a degree of valuation sensitivity built in as well. The single investment principle on which I would never compromise is the quality of the instrument. So it has to be an equity with durable pricing power, and that pricing power comes from that competitive advantage we talked about. When you don't have that, you have so much less security and visibility over the money you're risking, and it's not and something in my experience it's never worked out for me. And you know, one of the great rules is don't make the same mistake twice if you can help it. So I'm very, very firm on that one. Within the sphere of what we do, what I do, which is long-term investing in compounding equities, a lot of it is resilience when you're going through a market cycle. The reality is that no strategy works all the time. If one did, I think the markets would have puzzled it out by now. And it's having the faith in your own, but also the empirical confidence in your own discipline to stick with it, and having a really clear set of criteria for what matters, what you really care about. Price is a really important signal in the markets, but it's not the only one. And where you make your bread as an active fund manager is understanding when you should really lean on your toolkit of just whatever else you look for, quantitative information, qualitative information, and prioritize that ahead of the price. And that's really hard. So all of this comes down to balance, to maturity,